Welcome to your Mortgage Insider Update on August the 17th. We had some positive news this last week with inflation from CPI, Consumer Price Index, as well as the Producer Price Index coming in at or below expectations, leaving the door open for the Fed to hold a little longer and taking off the table many of the thoughts that they would raise rates. Their next meeting's not till September. We do have a speech from the Fed Chairman Kevin Warsh coming up at the Jackson Hole Symposium. This is a lot of economic thought leaders and central bank leaders from around the world will come to Wyoming, and they will all have speeches, but the most sought after, the most important one is on Friday with Kevin Warsh's speech, hoping for hints on their monetary policy, but he's made it pretty clear that forward guidance or any kind of guidance is not really his forte. So we'll see how that goes. But this last week, we'll take a look. Came with some positives. The CPI report came in, better than expected. So we saw a little bit of a dip on the rates, but then more announcements from the Middle East that we're not making any progress. And actually, the end of the Memorandum of Understanding expires this week. So that leaves it open that hostilities could continue in Iran. Continued pressure on oil prices puts a dark cloud over the outlook on longer term rates staying low as the market just has to take it in. Every day is a new day, so we'll take a look. So this morning we do have the 10-year Treasury up slightly, still hovering back at that 4.71% is kind of the high point. We'll take a look deeper into that. Mortgage-backed securities are relatively flat on the day. Overall, interest rates have survived the last week with positive news without breaking above the highest levels of resistance, but not breaking below the 25-day average. And we can see today we're starting right at that high level. We did have a few days where it looked like 10-year treasuries would come down a bit. The producer price index was kind of the icing on the cake. We had kind of a nice run down on Thursday, moved back up on Friday. As coming into the weekend, there was a lot of angst in the marketplace over what was happening in the Middle East. So starting off today, just a little higher, but we can see that we've touched on this level at the 4.71% back on August 11th, and we hit it on July 31st. We hovered right around this at the mid part of July 24th, 23rd. And prior to that, this has been a tough level to break above. Any level above this on the 10-year Treasury would be a very bad sign. We can see that we have breached it back on the 31st of July, and it held. So we've stayed in this level. There's been some not so good days where rates have moved up, but then they moved down with good news. So we're looking for some good news. A break below the 25-day average would give us some headwind or some wind in our sails, I should say, and potentially lowering rates. But without a Fed meeting coming until September, mid-September, there will be another consumer price index. There will be at the end of this month the PCE, personal consumption expenditure, which is also one of the top inflation numbers watched by the Federal Reserve. That will come out at the end of August. So a lot of data points that will come out. We did have unemployment coming in a negative this last month in July, so lost jobs in the economy, which was actually not expected. So unfortunately, people losing their jobs is a positive in the world of interest rates. But the dual mandate at the Federal Reserve, that they are going to be paying close attention to joblessness as weekly numbers for unemployment claims come out every Thursday, as well as the inflation figures that we got last week gives us a little bit of breathing space that the Federal Reserve is not likely to raise rates in the short term unless we start to see a lot of negative news coming in on inflation, or if the jobs numbers start to increase or do better. So we'll keep an eye out for you every week. You can follow us here on the subscribe at YouTube if you want to see the weekly updates. We do a newsletter. The link is in the description below. Feel free to read through that and stay tuned. Take care.